President Trump reaching across the aisle to keep driving strong economic growth in the U.S.
Now is the time for members of both parties to join together, put partisanship aside, and keep the American economic miracle going strong. It is a miracle. We're doing so well. And I've said it at a lot of rallies. Some of you have probably heard it so much you don't want to hear it again. But when people come to my office, presidents, prime ministers, they all congratulate me almost the first thing on what we've done economically, because it is really amazing.
Joining us right now is OppenheimerFunds Chief Investment Officer Krishna Memani. Krishna, good to see you.
Good to see you as well.
And you agree that the economy is amazing and doing well, but you see a slowdown on the horizon.
Yes, I think the economy today is doing reasonably well. We are probably going to end up somewhere north of 3% for the year. But I think the slowdown is already unfolding. So by the middle of next year, we are talking about getting back to close to 2% rather than 3% that we have seen in 2018.
Do you think the slowdown's based only on higher interest rates? I mean, the Fed left interest rates unchanged yesterday, but it does look like we're going to see a rate hike in the month of December. Is that what's slowing things down or something else?
Well, that certainly is slowing things down a tad, but I think part of it is because the capital spending cycle that we expected, the capital spending boost, never materialized. So for the economy to get to a higher level, we need higher level of productivity. And productivity is improving, but not to the level that we need it to be.
We've talked about this a lot, Dagan. The capital, one second, Mike, I'm sorry, but the CapEx. When the president rolled back and the Congress rolled back all those regulations earlier, early in his administration, cap spending did increase. And we were like, oh, businesses have been sitting on cash for 10 years. They're finally putting it to work. Was it trade? Do you think the worries over steel and aluminum that stopped businesses to say, wait, I'm not sure about this. Let me sit on cash again.
Hard to quantify, but likely playing into that decision making because business expenditures in the first quarter, I think, were up 11.5%.
Sure.
In the most recent quarter that we got, in the third quarter, they were up only 0.8%. Is this just a momentary kind of waning? Because of the concerns about trade, we've gotten the Canada and the Mexico deal done. It needs to get ratified by Congress. There's movement with Europe. Is that really what's in the way, and is it just a momentary pause heading toward the end of the year?
Well, I think from a cyclical standpoint, in this cycle, capital spending never got to the level that it has in the past. And I think the likelihood that it'll get there this late in the cycle is probably very small.
Bye.
Having said that, the capital spending is higher at this point in the cycle than it was in the beginning. But it's not enough to get us to 3% growth rate, I don't think.
So, I'm going to push back a little bit here because for investors at home watching this, trying to time the market, I'm sure you've heard the saying, it's not timing the market, it's your time in the market. So to try to reallocate assets out of funds, or if you're planning for a slowdown, I think it's very dangerous for people to start to take their retirement funds, for instance, and say, well, I'm going to move over here now, or reallocating on an active basis. I would advise people watching at home that we're going to go through ups and downs in the market, but stay invested, because investors will typically panic out at the wrong time, like last month, and then not know when to get back in.
So I couldn't agree with you more. Far from telling people to get out of the market, if you kind of go back and look at things, in this cycle, the most amount of money that you have made is just being there rather than being out of the market. And our view right now is 5 more years. That is, this cycle will probably last another 3, 4, 5 years. It's not ending in 2019 or 2020 that some people are forecasting. At this point, there's enough momentum in the economy to carry us through for a long time. Inflation hasn't manifested itself, so absolutely stay in the markets. There's no reason to take your money home just yet.
I want to ask you about trade, because the U.S. and China locked in this stalemate over trade. Despite the tensions, October saw a reported 13% increase in Chinese exports to the United States from a year ago. This is Secretary of State Mike Pompeo and Defense Secretary Jim Mattis are scheduled to meet with their Chinese counterparts in Washington today. So I want to ask you about the Chinese strategy, but first, there's an article in the Journal today which is questioning this new House leadership and what that does for USMCA. Yeah. So we're supposed to see this ratified by Congress, as Dagan just noted, in the new year. Do the Democrats stop this? Do they force you know, just because they've taken over the House majority? Or is it all about the Senate?
It's really hard to see where they're coming from. As long as this leadership race is still in play, I don't think they take a hard position and go to the president and say, hey, this is what we need out of it. I don't think that happens.
So you think it gets ratified?
I do think it ultimately gets ratified because I think blue-collar America wants it to happen.
I think it gets ratified for the simple reason there's really good policy. I think free trade is a good thing. If you kind of go back and look at the Chinese data that you were talking about, at the end of the day, trade hasn't really gone down meaningfully. What has risen is basically tension in people's mind, and that's kind of ending up taking away from capital spending that we need at this point.
One thing to note is in the Wall Street Journal article that Maria mentioned, the unions will put pressure on the Democrats to ratify this. This is a huge win for the auto workers in this country because it discourages auto manufacturers from moving production down to Mexico for cheap labor. It's a big win. And quite frankly, the steel tariffs are a big win for the steel workers of the country. So they've got a lot. So all it takes is maybe a couple phone calls from the union leaders to Nancy Pelosi's office. I guarantee you they get on board.
Donald Trump didn't become President Trump without those people swaying into his corner. They didn't believe where Hillary Clinton was on this. And even though it'll give Donald Trump a victory, they have to go there and match the president.
Richard Trump joined us earlier in the week and just said exactly what you said, actually, that it was a good deal. And he really faced criticism from those outside the union. So, Krishna, bottom line here, with all said, you're expecting this slowdown. Would you put new money to work in stocks?
Oh, absolutely. We, again, as I mentioned before, 5 more years. We expect this cycle to continue. There's still a lot of upside left in the market.
Even technology.
You're
looking for tech
especially
leadership.
in technology.
We need tech leadership, and I think you're going to see it in the last 2 months of the year.
We need tech leadership. Why? Because that will confirm that this market is on firm footing.
Yes, but also because that's where the growth is.
Right.
So you need growth to have, that's the strong leadership. Otherwise, you have weak leadership, which will eventually fail.
Those companies are actually executing fantastically, so I think tech is going to remain the leader.
Is there any sector you don't like?
Well, so I think the interest rate sensitive sectors is kind of in the walking around with an X on their back,
like
because
financials.
Financials, housing, things like that, because the Fed will continue to tighten for at least another 6 months. So I think there'll be a time for that, but that's probably middle of next year rather than right now.
All right, we'll leave it there. Krishna, great to get your insights.
Thank you.
Thanks so much. Krishna Memani, Oppenheimer there.